Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined the Clean Energy Metals Conference. Our next presentation is from Lion Copper and Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome John Banning. He's the Chief Executive Officer of Lion Copper and Gold, which trades on the OTCQB venture market under the symbol LCGMF and on the CSE under the symbol LEO. Welcome back, John.
Thanks, John. I appreciate it. And welcome, everyone, and thank you very much for attending and taking the time. Certainly appreciate it. Very excited to share the next steps for Lion Copper and Gold with our Yerington Copper project. Would invite you to have a read through the forward-looking statements for us at your leisure. Let's kick off with just an overview of our Yerington Copper project. It's located in Nevada, Western Nevada. It's about 50 miles southeast of Reno. Nevada is a very friendly mining state in the U.S., very, very friendly tax rate, great permitting process, a lot of support for mining around the state. As you can see, there's a number of active mines and mining projects in the state. A lot of mining infrastructure. Our project in particular has a reliable and secure water supply, which is incredibly important in the state of Nevada. And we're located in a district with extremely large copper porphyry deposits, and we'll go into that a bit more down in the slide deck. So this is a bit of a high-level summary for the Yerington Copper project. There's a lot of great aspects for our project. This is the Yerington project is the third largest construction copper cathode project in the U.S. by planned production. So we're looking at about 120 million pounds per annum for about 12 years. And I want to be clear here, this is not a project that plans to produce copper concentrate that is going to be likely shipped overseas, as much of the concentrate in the U.S. is. This is a copper cathode project. So we produce a final refined, we plan to produce a final refined 99.999% pure copper product that goes directly into the U.S. markets. We recently completed a PFS for our project this month. And so this is a well-advanced copper project with a very robust PFS that is highly de-risked and is also very scalable. So this project can be expanded very easily and readily. Big important part for our project is the positioning and the strategic land package that we hold, which creates opportunities to consolidate or create synergies with adjacent projects. So there's some very large deposits in and around the Yerington Copper project. We have a great partner and cornerstone investor with Rio Tinto. They are very supportive of the project and have invested about $28 million to date. Great thing about Nevada is we have a very clear and reliable permitting path with known timelines. And again, we have our water rights are secured and permitted for mining use. So in comparison to some other projects in the US, pre-construction copper cathode projects, we're about the third largest at about 120 million pounds per annum that plan to be in production. So all of these projects are planning to come online, say by the end of the decade, by 2030, and that's our plan as well. From a value perspective, I want to spend a little bit of time talking about PNAV ratio. So a lot of projects right now, copper projects in the US, there's a consensus PNAV ratio of about 0.3 and our PNAV is sitting at around a 0.05. So there's about a 6 multiple difference between our project, which we've just released our PFS on. So we feel that there's a significant amount of upside value for investors out there. I'm going to spend a little bit of time talking about the highlights from the PFS. The important NPV to initial capital ratio is about 1, which is very favorable. We have an operating cost to the project of just under $2 a pound, which is in the second quartile. All-in sustaining at $267 per pound, and our base case capital intensity is around $12,000 per ton per annum, which sits in the first quartile of copper projects. We have an extremely low strip ratio of about 0.3 to 1, an after-tax NPV of 15%, and initial capex $724 million, after-tax NPV of $694 million. And right now, payable copper in the project is about 1.4 billion pounds. You see a very high-level overview of the project. So we have the MacArthur series of deposits and open pits with the MacArthur oxide ROM heap leach and SX facility. Coming down south about 5 miles, we get into the Yarrington pit, which produces both oxide and sulfide material. So we have an oxide heap leach just to the north of the Yarrington pit, and then to the northwest, we have a sulfide heap leach. There's a SX facility being utilized for both of these heap leaches, and then a EW facility, electrowinning facility to produce the copper cathode here that services both the MacArthur SX fluids and both of the Yarrington heap leach SX fluids. I want to spend a little bit of time talking about the PFS and our partners. Incredibly experienced and valuable partners on this project. So Newton, our funding partner, as well as significant technical expertise coming in on the metallurgy side for the sulfides. Samuel Engineering, they're the lead for the PFS project. They covered off on process, civil facilities, infrastructure, and trade-off studies. AGP covered off on resource and mining. Pito Associates across hydrology and water management. Newfields across the geotechnical from a mining and as well as a heap leach facility design perspective. Got Woods Process for metallurgy as well, and then GSI on environmental. So this PFS is extremely rigorous. Again, significant parties involved, 7 qualified persons across the project signing off with significant study, technical, operational experience and expertise in their respective areas. We generated a significant amount of data for this PFS process, as you would expect. Very much a data-driven process, so we follow the data here. We do the math, we do the engineering, and we do the trade-off studies to arrive to a reasonable position for the project. The project has a conservative contingency on the capital of about 24%, so we see a lot of upside there as we move into feasibility study. And what's important to me and to remind people about this project is that this is a brownfields restart. So the Yarrington pit was mined by Anaconda in the 60s and 70s, and the MacArthur pit was mined in the 90s. So these are very well known and understood and characterized deposits from an operational, technical, and an environmental perspective. So we have a position of a very low technical and operational risk on this project. So there's a lot of information on this slide, but what's important takeaway is that there's over 660,000 feet of drilling into the MacArthur and the Yerington deposit. So that's 125 miles. So it's been extensively drilled. The geology risk is very low. We have a proven and probable reserve. If you do the math on this, is about 1.6 billion pounds of copper at Yerington and about 600 million pounds in mineral reserve at MacArthur. And when we took this from the PEA to the PFS, we did additional drilling and work on Yerington, so that significantly increased our position on the reserve. And on the cost basis, MacArthur dropped off a fair bit. But what that means is, which I'll go into on the next slide, is there's quite a bit of expansion potential for this project. So in terms of expansion, outside of the reserves, there's about 1 billion pounds of copper between the reserve and the resource. So if you look at the reserve shell, which is the red line here, and then the resource shell, which is the blue line, the reserve shell was calculated on a basis of $3.90 a pound. And you know, this morning, COMEX copper's at about $4.40 a pound. So we're looking at this as significant potential for project expansion as we move forward through the feasibility study. There's also a lot of resource growth potential. So you can see outside of the resource shell, there's a lot of indicated and inferred material that we could potentially bring into the project inventory in the future. I want to bring a little bit of clarification and understanding around our relationship with a very strong partner we have with Newton and a cornerstone investor. So to date, Newton's put in about $28 million to help us get the project to the PFS level. Newton's technology centers around heap leaching sulfide ore for copper. This has been very successful in our project with extensive test work that has been done. Newton's done over 40 columns and a lot of other test work and modeling to arrive at about a 73% copper extraction rate for our project for the sulfide ore. Their heap leaching process uses significantly less water than traditional flotation with tailings storage. And it also delivers a lot lower OPEX per unit, as well as a lower carbon emission per unit of copper produced. So where we're up to with that in terms of the Newton agreement is we've completed the PFS in August, and then as per our option agreement with Newton, they will make a decision in later this year in Q4 about moving forward with the project to a feasibility study. If and when that happens, we will immediately move into feasibility study and then move towards a decision to invest expected about the first half of 2027. So that will happen upon the completion of the feasibility study or a US $50 million investment. Importantly, here in Nevada, we have a very clear permitting path, and that can present problems for other projects in different jurisdictions. You know, Nevada's ranked second in the Fraser Institute in terms of mining investment attractiveness, and obviously it's the best mining jurisdiction in the U.S. By that ranking. But what's important here is this is a brownfield site, and there's existing disturbance and a lot of history and assessment over this area. We have a well and truly established history of mine operating permit issuance. And we have a good relationship with the regulators here. We know exactly what our permit requirements are, and we know what those timelines are. Something that can trip up projects and end up taking a lot of time is the baseline data collection. So that's been ongoing here for decades because of the historical nature. So that is well and truly understood and underway, and that's not going to be a critical path item for our project. The site is very well characterized for that reason, and that just lowers risk and uncertainty. There are no threatened or endangered species have identified. We've had discussions with the FAST 41 team at the government level, and we're a likely candidate for that, and we're working on that moving forward. We understand the state permitting fully, and that's defined, and again, we know what we need to do, and we've developed the schedules and identified all the permits that we need to. We know exactly how long that's going to take. Important part for us, as I mentioned earlier, is we have 6,000 acre-feet approved for mining consumptive use. We own those water rights, and that's incredibly important in the Mason Valley where our project is located. We also have access to additional water if and when we need it through some land option agreements that we have in proximity to our project. That being said, the 6,000 acre-feet that we currently do own does satisfy the project needs. So we have a sizable and a scalable open pit heap leach project. We have a clear path to production. Again, the project is characterized as 120 million pounds of copper cathode per annum for 12 years. We peak at about 150 million pounds in years 5 and 7. I think in the feasibility study, we'll be able to smooth that out, and that's going to help us on some of the capital cost side of things. We've got a great proven and probable reserve with low geology risk, lots of upside for the resource side in terms of project expansion, probably about 1 billion pounds of upside there. Strong recoveries. As I mentioned, Newton on the sulfides, all of our data, which is extensive test work, is 73%. And we're going to get about 60% on the oxides from conventional ROM. Most of that comes from MacArthur. We have extensive land holdings. We have about 35 square miles of patented, unpatented, and private land, which are near some major strategic deposits in this Yerington batholith. A really important part is the Yerington pit has a significant lake that is built up over time. There's about 43,000 acre-feet of water in the Yerington pit. So as part of our project, we designed with our PFS partners a water treatment facility and a program to treat all that water and be able to release it out for the local stakeholders' use to the tune of about $70 million over the first 4 years of the project. A lot of benefits, not to mention just the water coming out so that people can actually use and access that for agricultural purposes. But most of our project is being placed and has been optimized to occur on disturbed land. It's a zero water discharge operation with a lower carbon footprint compared to conventional processing and tailings. And our US, our copper, our cathode copper goes directly into the US copper supply chain. So a bunch of tick marks on what we've got done over the last 12 to 18 months. Our timeline going forward is get the PFS, the results published. We did that in August. We'll complete the technical report and publish that in September. We'll complete the baseline studies out to the end of 2026, move through the feasibility study, through the first half of 2027, start the permitting process in the first half of this coming year, and look to finish that off early in the first half of 28, and then procurement and construction from the second half of 27 through to the second half of 28. And then we'll be looking to commission and produce and plate first copper in the first half of 29. So I'm going to talk a little bit about our strategic land package. Again, I said we've got about 35 square miles in the Mason Valley. Quickly, what's important here is that Hudbay's and Mason project is about 2 miles to the west of our Yarrington pit. And we have a good strategic land location around that deposit. That's a 14 billion pound deposit according to their 2021 PEA. We also have our Bear deposit that we have, that's a Lion copper and gold asset that has a historical resource of 6 billion pounds. So you can see that this is our Yarrington copper project is quickly becoming a potential catalyst for consolidating this district for an extremely large long-term copper producing region in the US. A little bit more information about the Bear deposit. So the Yarrington pit, again, just down here. This covers a huge area, about just over 4 square miles. We've got 163,000 feet drilled into that. We control most of the land around that area, and importantly, this is private land. And we put out an intercept last year of drilling where we had just under 2,400 feet continuous copper mineralization, averaging 0.4% copper. So this is a significant copper porphyry deposit. We're currently evaluating the MRE potential of this deposit and how that fits into our Yarrington copper project and the overall district as a whole. So a quick summary, we have a de-risk project. It's scalable, open pit heap leach producing copper cathode. We've got a great partner and supporter with Newton, very clear permitting path, and a great land package, very strategic in proximity to other major projects in the valley. And we've got our own large copper porphyry Bear deposit pipeline in very close proximity to the Yarrington copper project. So what's coming up for us is complete the technical report in September. Newton will be making a stage 3 feasibility study decision in Q4 25. We'll get through our Bear deposit MRE potential evaluation. We're working through that now. We looking to have that wrapped up in Q4 of 25, and then move quickly into our DFS and permitting in H1 of 26. So thank you, and I'll start going through the questions. Got quite a few. So there's a question here about capital structure, and I haven't put that in here. So if you go to our website, there's a current corporate presentation that contains that information and all the detail across that. So I'll point you in that direction. How does Yarrington's status as the 3rd largest pre-construction copper cathode project in the US support domestic copper supply for energy transition and infrastructure? Well, I guess what I can say about that is there's about a 700,000 metric ton deficit of refined copper in the country right now. Or I think that was as of last year. So our copper cathode will be a significant advantage such that countries like outside the US won't be sending, we could be able to replace that copper cathode for the US supply chain to support the various, growing electrification thematic data centers and so on. So that can come from right here in the USA. What strategic advantages does Lion Copper and Gold gain from its partnership with Newton and the application of Newton's proprietary copper leaching technology? Well, from a strategic advantages, if I understand the question correctly, is that they're a strong partner and that they have a significant amount of technical and operational expertise that they have and can bring to bear on the project and how our project progresses, and importantly, the rate at which our project progresses. So we're working with them very closely on what, how we can bring those opportunities to bear. And we have a close relationship with Newton and always looking to enhance the way that we move forward. So there's a question here around the rights. What rights does Rio have with their investment? Rio Tinto has an option to earn an agreement with Lion Copper and Gold on these assets. And upon the decision to invest in the project, they would receive a 65% interest and Lion would have a 35% interest. The trigger for that is towards the end of the feasibility study. So should they enter stage 3 and commit to the feasibility study, then there's a 12 to 18 month period where we'll work through the feasibility study. And at that point in time, we will all have enough information to make the best decisions for the assets. So it would be at that time that there would be a decision to invest, and that would trigger a 65%, 35% split in the assets, the Yerington Copper Project. So there's a question here around, with high tariffs on copper imports and growing demand for copper, is there a path to accelerate build out and time to production? That path for us, we have evaluated. And that path for us is to enter into the FAST 41 framework. And that framework holds all parties, and including agencies, to account for staying on a timeline, which we have evaluated and calculated to be about 2.5 to 3 years from when we start the process, which is already accelerated. It typically can take much longer. So that's at this stage, with our current information and FAST 41 engagement, that's about as fast as we could move through it. We could move through the feasibility study a bit faster, but ultimately it's going to be the permitting that is the critical path for getting to first copper. We've got about 1 minute left. And I think that's about all the questions. So I would just like to thank everyone for your attendance. and appreciate your questions very much. And I look forward to seeing everyone again at a conference or having another webinar as we progress through and the company provides updates. So thank you very much for your time today.